deal. And now we'll open the floor for your Q&A, if you have any. Okay. Shall we have a microphone, please? Please identify yourself before you ask your question. Thank you. Yep.
Thank you. Georges Arboud, Bloomberg. It seems something, thank you for a very precise and brief summary of the regulation. It seems something is missing between public offering and professional client. If someone comes and solicitates a private bank to invest, I mean a high net worth individual, solicitate a private banker to invest into a particular area, China, Asia, particular asset class, hedge fund. And you need to look for alternative. Correct me if I'm wrong, if he's a professional client, you might want to show him the fund and you'd be okay. If he is a high net worth client, but you don't want to go through the full extent of having it offered for the public, you might have an issue there because you would have to wait for 30 days, for fund to be recognized.
40.
40 days.
40.
Yeah, 40 days. What do you,
30, I'm sorry.
Yeah, what do you make of the needs? You have installed some needs and requirements regarding suitability. So if the investor is suitable to invest a particular asset class, what would be the need? By the way, I forgot to mention, I'm talking about foreign scheme. What would be the need for the bank to go back to the CMA and look for recognition when this particular fund has already been approved in its own jurisdiction, let's say in the US or in the UK, which provide the same kind of protection to its investors? Why would a Lebanese bank go and look for some kind of recognition for this fund if it is suitable for the client? If he's professional, there would be no need to go and wait for 15 days. And if he's not a professional, but you don't want to go to the full extent of having it offered for public offer, but it's suitable according to the risk profile that has been done already by the private banker. It seems something is missing between the two. And just to continue also, especially that you have a lot of restriction on public offering, from what I've heard from Mr. Ghalaini. Then last point, just to finalize the question, if I were based in London and I was asked the same thing, I wouldn't go and ask the regulator, the FSA, whether or not I am allowed or not to propose this kind of a fund to a high net worth individual every time I feel that, or any private banker feel that it is suitable for him. Thank you.
Do you want to take all the questions in one go or answer as they go along?
No, we'll answer each one as we go.
It's a complex area to deal with. In theory, it's possible for any investor to decide they wish to invest in any fund, wherever it may be, and to instruct somebody to buy that on their behalf. That's their decision as the investor. They've chosen. They're not asking for advice in this. In your case, I believe they're asking for advice, yes? So that's one instance. Typically, if you're looking at advice on funds for the members of the public, as we've said, you would expect that scheme to be eligible for the public offer. The issue that you have to deal with is that increasingly in Europe, it is expected that any fund that is being offered into any country, some form of data is available on that, right? You've heard of the Alternative Investment Funds Directive in Europe. and we have the UCITS directive also in Europe, and essentially where you used to have an unregulated group of funds that were not for public offer, they are now regulated indirectly through the manager who has to provide certain data. So in Lebanon, we're looking to try and achieve the same approach, that we get a certain level of data on the funds that are being sold into Lebanon. And therefore, to know which funds are being recommended into Lebanon is a consideration for the regulator. So I can't comment further on the sort of decisions on that front, but that's the element we're dealing with there, the awareness and the knowledge of the Lebanese regulator of what is happening in Lebanon, which, broadly speaking, we're trying to achieve an alignment with the European system whereby that regulator would have that knowledge, okay? So that's what we're trying to achieve. Exactly how we achieve it, we can take a look at the area you mentioned, but at the present time, I can't really comment any further on that.
The only thing I would like to add, you brought up something which is quite unique. You've touched base on the sophisticated investor and on a person that would be or could be considered as a high net worth individual that may not have that specific expertise. So this is something very important to us, because we believe as a regulator, from a public offering point of view, that the suitability aspect, part of it is the net worth, but the key element would be the knowledge of the investment. So I understand fully where you're coming from. We've discussed the exempt offering on the security offering, and we've had a kind of a twist or a change based on the feedback that we've received from the market, and this is a decision that was made by the chairman as well. And we will look into this particular aspect and get back to you on it.
Hello, Jean Riachi, FFA Private Bank. I think the issue that was raised now is very important, because it's due to the nature of our market. We're a small country, we're a small market, and obviously the number of funds that are going to be offered because they have gone through this process is going to be limited because of the limitations due to the size of the country, which means that if you want to provide a good service to your clients, who want to diversify their portfolios into different asset classes, into different geographical areas, you won't be able, under this regulation, to propose to them the diversification that is needed for them. And this is a real issue. I think the authority has to think about it. The other two issues that I see is that what I see elsewhere in other jurisdictions, there are the notions of execution only and the notion of discretionary accounts, where usually these types of requirement of having the funds authorized by the authority do not apply, because obviously when a client wants you to execute a transaction, it is your role to execute it. But this is different from what George Aboud said, because the other side is also important, because sometimes it's not solicitation only, it's they solicit you for an advice. What kind of fund can you show me in this specific area? And especially that according to the regulation you have today, if a fund has been approved for one institution, you have to, as another institution, you have to go through the same process if you, no? Not anymore. Ah, good news, good news. Okay, thank you. Thank you.
If I want to, sorry, but I'm not sure you really answered the question, because if I were to give the advice in London, it would take me a day to invest. Today, if I still have this concern, if this request from the client to find the best fund in China, and the guy is either professional or is suitable, it's going to take me 15 days or 40 days, especially that, Mrs. Sally, you said there are no specific requirements. Your only concern was to make things clear, disclosed, make sure everything are are very clear. There are no real requirements regarding the exempt offering, apart from the fact that we need to disclose everything, since the guy is professional. And if he's suitable, it's our job to make sure that the investment is suitable for him.
The reason I'm not giving you an answer is you are talking about giving advice on securities, and I'm a funds expert. Okay?
On the fund.
No, yeah, I know, but you're talking, the thing is that when somebody offers a fund here in Lebanon, they are offering a security, right?
Yes.
And that's advice under securities regulation. And while I can answer questions about funds and eligibility of funds, that's a different thing. What the regime here in Lebanon is for advice and how that's been dealt with is part of a separate project to mine, okay? I can't, you know, it's not my correct role to answer a question about giving advice on funds, because that's not my role here. My role is the regulation of the fund and not the regulation of the advice about a fund, okay? That comes under John's securities markets role, and I'm sorry. I would, if I had the technical competence to answer the question, I would try, okay? But I haven't written the framework here in Lebanon for that, and therefore I shouldn't reply, because it's not something I'm competent to answer.
Your answer is, sorry, madam, I interrupt you. Sorry. Your answer is interesting because it would lead to say that there is indifference, that there is some kind of definition to give to the notion of offering. Does giving an advice for one single client about one fund, provided it comes from a jurisdiction, recognized jurisdiction, etc., maybe we could consider this differently from the notion of offering, where you really do a marketing and a promotion of a fund. It's not something that you have off the shelf.
Allow me to help out. Mr. Riashi, as you know, this is a topic that you brought up during the meeting with the chairman. I recognize, I understand fully what you just said. We will go back, circle with the chairman on this particular issue, while keeping in mind, this is something very important, that when we're dealing, once again, with a high net worth individual that may not be considered as a sophisticated investor at that point in time, the sophistication of the underlying instrument is quite important. The type of risk involved in managing such kind of product is very important. So if we're dealing with a UCIT product, and this is something we've discussed so many times with several institutions before, where the type of derivatives that could be used for leverage purposes could be very risky. At that point in time, the sophisticated investor could be totally knowledgeable of what's involved, and that's fine and dandy, yet if it's part of a public offering, and here we go again as to how we want to skin the cat. Is it fair to assume that your institution is selling it to only, or one relationship manager is selling it to one person, and then all of a sudden another relationship manager within the same institution, and he could come out and say, I only sold it to one client in my book, and then we have another institution with 30 relationship managers, and then we have 30 clients. So what would constitute a public offering at that point in time? So it's very important that we clearly understand the nature of the market, the target market. That's why we specify who you're going after, and we will fine-tune it after we consult with the chairman.
Could I add something, though? Because my concern is also with development of your domestic market. Yeah, you have hundreds of foreign funds being offered into Lebanon. You have very few domestic funds. And so all the money from Lebanon is going outside Lebanon. Now, that may be what people want. But you do realize there are ways you could cope with that demand inside Lebanon. I mean, you could create here in Lebanon what's called a fund of funds, right? And that fund could then invest in a range of other foreign funds. You could diversify risk for your clients. It could be publicly offered here in Lebanon. And it would actually bring Lebanese managers, some opportunities, as well as your investors being able to get investment abroad. So I do feel slightly worried as a foreigner. I shouldn't be worried, I suppose. We can sell our funds to you. Wow. But you know, it would be good to see if some of your domestic funds could start to invest in these foreign funds and offer foreign exposure to foreign funds from a fund based here in Lebanon. And I really do feel that there are opportunities under this regulation that you could look at that maybe might solve some of your problems in a different way. Not all of your problems, I understand. But you know, some of your problems might be addressed by that.
Thank you. Dr. Asairan.
Yes, in fact, this is exactly my comment was on the establishing a domestic local fund. When I look at the whole regulation, by the way, there is plenty of small comments here and there. I mean, I think we will do that in due time. But my concern was more on establishing. So you have either the offering and the establishing. So when you look at establishing a fund, you're looking at establishing a local fund. This local fund might invest in Lebanon. I mean, the underlying asset might be in Lebanon, but also the underlying might be outside Lebanon. Okay. You see, you have a lot of exemptions for domestic, for a local funds that invest in Lebanon, and the most important exemption is that they can invest in government securities. But basically, we are not rated. I mean, we are less than investment grade, and yet we can invest. I mean, it falls within because this is Lebanon. It's fine. Yet, when we try to look at the possibility of establishing a fund that will invest abroad, I mean, whether through a fund of funds or through just securities, the type of restrictions that are there would prohibit a domestic fund from being established. And I'll give you an example. The example would be the counterparty, and that's an existing fund. I'm talking about an existing funds in Lebanon that we as a bank have established that really is managing funds, securities in Egypt, for example. Now, if I have to look at the regulation today, the way it is being drafted, it means I cannot do it. I cannot even have a fund established in Lebanon that will invest in Egyptian securities because of the kind of restrictions that's been putting. In fact, we just talking about, I just mentioned also that I cannot have a fund local fund, that will invest in derivatives. I do not understand why. I mean, don't have to offer it for the public, but I don't see why not. I mean, if you want to establish a fund management in Lebanon and to bring in all the talents of hedge funds all over the world that are Lebanese, give them a platform here, let them invest the way they want to invest, regulate them. But why you're putting restrictions on what to invest and how to invest? I don't see it. And I think your concern, when I look at it, is really heavily concerned about protection of the investors, which I understand. But what about developing this market that you've not been talking about? If I want to develop the local market and to bring in the fund managers to have established in Lebanon, I'm sorry, this is not the way it's going to be.
I mean, if there are practical difficulties with meeting any part of the regulation, that's what we want to hear. Yep. So we can work out what we can do. Yep. I mean, you must bear in mind that one starts with a draft for comment. It is a draft for comment. And, you know, if there are practical difficulties in making some of the provisions work, then please tell me and tell us. And we will see what provision may be able to be made.
I'd just like to add something, Sally, in response to your comment, Dr. Asairan. We have not said no to derivatives. I mean, I just want to make sure we're very clear. We said no to derivatives when it comes towards dealing with public offering. Now, if it's going to go through hedge funds, I think in any jurisdiction, hedge funds are suitable towards sophisticated investors. And we have said, and we came out, we said, okay, a lot of input came back. We cannot and should not put obstacles or hurdles in selling funds that are approved through the European passport, right? And we said, okay, we're going to close it to the public, but we're opening it through an exempt offering. And through the exempt offering, I don't know if you've noticed, we didn't even put a cap on the number of individuals to make sure that you have the liberty and the flexibility to go and offer it to all your sophisticated investors, provided the only condition we put there that the minimum ticket is $100,000. So when we're referring to get the talent from overseas to come to Lebanon and do the derivatives in the foreign markets, or hopefully we're going to have derivatives in the local market when we have the electronic trading platform up and running, then those particular funds could be or could still be sold in Lebanon through the exempt offering.
You're talking about offering. I'm not. I'm talking about establishing. Even if there are no restrictions, I'm not talking about offering. I understand what you're saying. I was referring to what Ms. Sari has been
Domestic.
talking about, establishing. I want Lebanon to have a platform where you can establish funds, either to sell it for the public, then it has to go to the public, or to sophisticated, to all over the world. That's my point. It's not at all on the offering.
Okay.
Mr. Ghalaini, just one last word. It's a very good news that you've removed the cap regarding the sophisticated clients, but it's still, we still have a gap between the public offering and the professionals, people that didn't want to sign the professional classification, but could allocate part of their investment into those sophisticated instruments. It would be difficult to deal with that if...
I mean, what it boils down to, we're going to go back down the aisle of the security offering and evaluating as to what is meant by a suitable recommendation. The suitability aspect, as a lot of people in this crowd today know, it's not a one element part of it based on the net worth or based on the age or the number of dependents or past investment experience, or as the governor added another boomerang in it, that it has to be a continuous of 5 years experience. At the end of the day, and the onus of responsibility that we have as a regulator, as you well put it, is protecting the investor. And protecting especially the type of investor that doesn't know the type of risk involved in those instruments. So all what we're saying at the present time is that for a public offering, you are approaching or appealing to the market with a very small denomination that could be any person walking on the street. But as far as sophisticated, which is with the knowledge and with everything that we've just discussed, we're going to go, so far, this is the feedback, this is the direction we've received from the board and the chairman on this matter. We'll take that into consideration and get back to you.
Thank you. Any other questions, please? Yep, gentleman over there. Wait for the microphone, please.
You said something which is quite interesting. A lot of institutions, they have open architecture, which means that not only they can offer in-house funds, and they can also offer outside from like Fidelity, Templeton, whatever. And you have said that today you don't have any problems that we offer other funds that are already accepted by the authority, but we don't have the list of those funds that have been accepted. How can we know that?
The new regulation does actually require the CMA to have a list of
When?
those funds that are recognized. I mean, it will be made public for funds which are publicly offered. Yeah.
We're talking foreign
Yeah,
Yeah,
but something to keep in mind. Are we going to have, for example, a representative? You picked the example of Fidelity, so I'll go with that. So are we going to have a commitment letter, let's say, from an application point of view, coming from Fidelity, hypothetically, stating that these are or will be the distributing agents of Fidelity as a fund? Hypothetically, this is one question. And something else to look at and to consider when we are preparing such kind of list is really understanding what type of exposure. Now here we're talking about public offering, right?
I'm talking about exempt offering. Exempt.
Okay, sorry. So I take this back. So we'll look at it and we will certainly come back with some feedback as to which funds would be recognized as such.
For the public offering, Mr. Ghalaini, if, I mean, a bank would like to offer it to the public and goes to the CMA, asks for approval. So basically, that approval comes in. Yes, I mean, you said the kind of requirement with conditions, not condition, whatever it is. I'm assuming it is accepted. Once it's accepted, it should be theoretically put on a list that is being approved. So any bank does not have any more to go back to CMA because it is an approved one.
Correct.
Okay. And it pays once. Now, I think in terms of logistics, it will be much easier to do it that way, rather to ask for the fund to set up the application of this. I mean, I think banks, this is what they do. You know, usually they solicit, they talk to funds all the time. Funds come to the banks. Once a bank goes to the CMA, I think all banks can use it. It's the same.
Okay, fine.
I think it's easier.
That's a good point.
I think we've discussed it, and we even joke about it. So whoever pays the fees, somebody else will benefit, but that's fine.
That's fine. That's a good point.
Well, or all the banks could get together and make a list. Come forward.
Me again. That,
I told you.
there might be an issue. There might be an issue with the distribution agreement thing, because sometimes you want to sell a fund, but you don't want to even have a distribution agreement. You'll do it without getting retrocessions or whatever, just because you find that this fund is a good one. Sorry.
What's the question?
I heard something.
Me too.
Why would we involve the foreign entity, the foreign fund, in this process of registration in Lebanon? Why can't we just simply say, okay, this is the prospectus, and it's the institution in Lebanon that does the work?
I mean, we didn't say it has to be that way.
Yeah.
Regarding, the distributors, it seems that it's going to be a distributors for each fund, foreign scheme in Lebanon. Let's say one bank is the distributor, another bank decides to promote the fund. Would it affect the second bank in any way, or the fact that there's another bank distributing in terms
Once a scheme is recognized for public offer, it's recognized for public offer.
So the distributor is just here to make sure that
The distributor is basically here
There's
to make
a
sure that
reporting
the
statement.
Lebanese investor can get information in Lebanon, right? Because otherwise, where do they get it from? I mean, I have searched online sometime for information about Fund A, share class B, whatever. And for an ordinary person, very, very difficult to find the information for a foreign fund, and probably in a foreign language, possibly too, yeah? So the idea is just to make sure that there is access to that information here in Lebanon for Lebanese investors. And services, not just information.
Okay. Do we have a question back there? Yes, please.
Nadine Abu Asli from Bank Med. I want to ask about Article 7, Law 706 of put a cap for the investment of a scheme in Lebanese government securities, whereas this new regulations limit the cap to 35%.
Can you raise your voice, please? We're
Why
not-
this limit is set? What is the reason behind?
I think what you will find that the new regulation says is that you can invest 100% of the
100%.
fund in Lebanese securities, but up to a maximum of 35% in one issue of that security. Okay?
Even in one issue, is there a reason for this?
Concentration to diversify the portfolio.
Well,
The maturity one, I mean, a lot of reasons.
it's also why pay the manager to manage one asset, right? I could have one fund investing in one issue of government securities. Should I pay a manager 1% or 2% per annum to manage that? Huh? I might just as well go and buy that issue directly for myself. So we want, we want the manager to manage, not just to buy one issue.
Does this limit apply to a recognized scheme?
No, the limit would, well, actually, you will see a very similar limit across Europe. So it might well apply to the fund, wherever it comes from, in that country as well, because it's a very common rule. But no, because the recognized scheme comes from wherever it is, let's say probably in Lebanon, it's going to be from Ireland or from Luxembourg, Would that be the most places that foreign funds come from?
Probably.
Yeah? Okay, if they're for public offer, if they're UCITS funds from Ireland or from Luxembourg, they will be subject to a very similar rule in their home country. But it's their home country regulation that will apply to the investments they may make, and not the Lebanese. So what Lebanon would look at would be to see, is the investor protection equivalent? Is there reasonable diversification in the foreign fund? And providing it's reasonably equivalent to the Lebanese rule, then it would be okay. If it's not reasonably equivalent, it would go to being a foreign exempt scheme and only available to offer to professionals.
Okay. Any other question? Okay. Please.
3.
There is, in the whole presentation, the custodian there is a custodian that takes 2 roles, basically, a custody role and an administrative role.
Safekeeping.
Well, this is safekeeping is the custody, but also the administrative one. And I'm wondering why this is the case, because a lot of jurisdiction, they have 2 roles. A lot of funds have their own administrators, which is different from the custodian. In this, there is a custodian and there is the administration. Here, the CIS custodian plays 2 roles, the custody, the safekeeping, but also the administrator. I'm just wondering why.
Just to comment on that, what we see is that the custodians must ensure compliance with the bylaws of the fund. The manager is the one who makes the calculation of the NAV, which is very dangerous. Shouldn't be the one making, should be independent. And actually what is missing is the administrator. And we don't see this role as independent function in the regulation. Especially, our concern is you can apply for a license to be a CIS custodian without wanting to have all the duties of the administration and the supervision of the fund.
Let me just add to this, because one of the restrictions you're talking about establishing a fund that will have, that will invest abroad. Establishing a domestic fund that will invest abroad. There is a lot of custodians abroad. If I'm just having a custodian abroad to safekeep the assets, they will never accept to do the duties of an administrator. So, in fact, by putting them together, I think also we are restricting ourselves from having a separate administrator that will do all the administrative work, and the custody is separate.
I'm sorry, could you clarify what you're referring to when you say administration?
Yes. First, the calculation of the net asset value.
Yeah.
And, if I remember, the supervision of, all the
breaches.
The powers, the breaches of whatever the fund manager is doing. Yeah. I understand that we need to separate the custody, the assets, physical assets, from the fund manager. That's fair. And we need to separate also the administrative work from also the fund managers. But putting them together as CIS manager and CIS custodian and administrator, I think it's not necessarily the only scheme. We can have separation, separate people. They have to be accepted, they have to be regulated, fine, but they can be separate. And most of the time, all over the places, they are separate.
If you look across Europe, every sort of fund in Europe now has to have something called a depository. Okay, this is the word used in the European directives. And the depository has 2 functions. One is to supervise certain aspects, valuation, pricing, creation and cancellation of units, and compliance with investment limits. Okay, that's what we call the supervisory function of the depository, right? The depository also has another function, which is the safekeeping of the assets of the fund. Okay, those are both legally under the European directives the responsibilities of the entity called the depository in that regulation. in the UCITS directive and the Alternative Investment Fund Managers Directive. They both use the same word, okay? Now, in Lebanon, what we have in the CIS custodian, it's called a custodian because that's what it's called in Law 706, so we're stuck with that. But it has exactly the same functions as the European depository. Number one, it has some supervisory functions, the one I just described, and number two, it has the safekeeping functions. It is permitted, if it wishes, to delegate custody to a pure custodian, which only safekeeps the assets and holds them, but it remains legally responsible for that function. Does that clarify the issue at all?
Yes. Yes. I mean, as long as you separate, I mean, you can separate the custody.
You can. You don't have to. It's not obligatory, but it's possible.
Because
Yes.
looking at it here,
You won't find in Lebanon anybody
exactly.
able to do both functions.
If you delegate.
No, I mean, the custodian in that case, I mean, the administrator here, I mean, the supervisory role is the important, because when you delegate, I mean, still has a responsibility, but then the safekeeping will be only a safekeeping. I mean, you're keeping the assets separate from whoever it is. That's what it is, under one place. That's...
Yeah. That would be the case. I mean, it's always possible to delegate the
We'll
function
clarify
of
in
custody.
any case, but that's our thinking. In fact, also, since we're talking about also manager and custodian, this Islamic thing, I'm just wondering why it has to be a CIS custodian, Islamic custodian, a CIS Islamic fund. I mean, as long as it is Sharia compliant, I don't think we have to get it.
I'm sorry, that is due to something I misread, actually, in one of your regulations.
It's being attended.
I misread something as saying it had to be an Islamic bank or Islamic financial institution. But I see when I look, it says Islamic bank or financial institution separately. So that I will change. Okay? I'm sorry, that's just something that I misread in the rules for myself.
I only have one comment to the comment of Mr. Riashi as a response. Actually, worldwide, it's the responsibility, and correct me if I'm wrong, Sally, the responsibility of calculating the NAV is in the hands of the fund manager.
Yeah.
And the circuit breaker in crossing the T and dotting the I would be the custodian in making sure that the calculation is being done properly. So I understand perfectly the segregation or possibility to have a conflict of interest, but that's why we have the custodian to make sure it's being monitored properly.
I mean, actually, as it happens in Europe, I can't speak for America, I don't know the processes so well, but in Europe it's extremely common for the fund management company to outsource valuation as a service also. So it's at one remove from the fund manager also, although it's responsible and it must check, it actually hires an external entity to do this in order to remove the conflict of interest from sort of, its own pocket, as it were. So nothing would stop you doing that in the regulation. It would be absolutely possible for you to hire an external valuation service, if you so wish, as the manager, and to use that, no problem.
Okay, any other questions? Yes, please.
Hello, Joël Ferrali from Banque Med. How are banks and financial institutions expected to comply with the Lebanese banking secrecy law, while at the same time the new regulations of the CMA set disclosure requirements on the banks and financial institutions regarding information on the investment collective schemes? Thank you.
I'm sorry, I didn't get the question. Can you repeat it, please?
How are banks and financial institutions, how can they comply with the Lebanese banking secrecy law, while at the same time there is a disclosure requirement towards the authorities to provide them with information about the CIS and the investors as well?
Okay.
Thank you.
Allow me to talk. The Law 161, I don't know if you refer to it or not. Law 161, again, depending which legal firm you consult, we are from a very strong opinion, and so is the chairman, that I forgot the number of the article, Colleen? 56. The article clearly, in our opinion, as well as the chairman, clearly states that the banking secrecy does not apply to the CMA. that's our own opinion. So we understand clearly that some other people have consulted and have difference of opinion on the matter. And that's why we thought we addressed it through Article 66 that came out of the BDL, which clearly stipulated and stated that any institution that wishes to deal in financial securities should set up a secondary account, and that account, they should take all legal necessary actions and measures to make sure that the control unit of the CMA is able to access this information. Furthermore, and more importantly, I keep getting this feedback, and I would like to address it once and for all. Amazingly enough, majority of the institutions have taken all the legal measures and they have got all their clients to sign a waiver. And yet we still keep getting this kind of query as to we cannot show you this information. And by the way, let's make it very clear, the reason why we're asking for this information is to protect investors, right? So I can't understand honestly or appreciate certain angle where individuals being clients for now, if the regulator is there to protect them, and yet we have a position coming from the financial institution or as a bank saying, well, due to bank secrecy, we're not going to show you this information, even though the client signed a waiver that they could. So let's make sure that we line up our ducks in this matter. We as a regulator ended up with Law 161 being leveraged and empowered to regulate financial markets. We do not come anywhere close to anything relevant towards commercial banking or any data related to any client dealing with a bank. So the law is clear, the circular is clear, and the institution that wishes to take and deal in financial instruments, as Circular 66 stated, has to take the legal measure to make sure that those accounts are accessible.
Let me add up for what Mr. Khalid said, is that this has been really, we went through that in depth in the discussion in the CMA and BDL 2 years ago or 3 years ago. And that's why if some banks would see or some firms would identify Article 56 and Law 161 differently. That's why we had a circular issued by BDL asking all institutions who want to operate in financial securities, they have to have accounts which are subject to supervision of CMA. And they have asked banks to take all their legal measures to protect themselves against such an act, against such banking secrecy. So we had that dealt with, and this circular was issued in March last year, in 2014. And I expect that all banks should be compliant with that circular as well. Any other questions? Yes, please.
Michel Shikhani, Blom Bank, Blom Invest. I'm very happy of what I hear today. Maybe I'm the old veteran of creating funds in Lebanon. We started in the year 2000, and everything that I'm hearing today is going in the right direction to make things much clearer, much more transparent for the public, for the investors, and to understand more our responsibilities. However, I have a point on the NAV calculation. It is stated somewhere, I think, and I don't know what page it is, that some securities we have the bid and offer rate, and some securities can be within at the midpoint or at the high point or at the low point. And most probably this relates mainly to Lebanese securities, because it's not on the stock market, because the stock market we have just one price. So it is on the Lebanese securities, and we have had a lot of arguments and discussions with the auditors of the funds. Maybe every 1 year or 2 years, auditors would come and would say, what is the way that you are considering the price of the underlying securities? And we reply to them. We usually have a procedure that takes into consideration the major banks. We take 3 or 4 banks, what is their quotation on Reuters or on Bloomberg, and we take the average bid on the fixed income side. I think if we have a clearer or a tighter range, we don't have to go to the upper range or to the lower range, and maybe this is something that we have to look for, because every fund manager dealing on Lebanese securities is handling his own assessment of the prices to mid-clear, and mid-clear is valuing portfolios. So at some point in time, we can find for the same security, two fund managers giving two different levels, and these levels are taken by mid-clear as is. So within the role of mid-clear, I think it will not be solved out on the fund manager side. Maybe if you can look at it and consider that for Lebanese securities, especially when we have turmoil in Lebanon, we have a bid-ask rate which is sometimes 3% or 4%. Maybe that should be the responsibility of CMA or mid-clear to have a homogeneous quoting of all Lebanese securities for valuations like for the banks at the end of the year, but maybe every day for all the funds that are proposed to the public. Thank you.
Do you like that?
I don't think, if I understood you correctly, Mr. Sheikhani, it's not a generic pricing that should be developed by us, but a kind of a consistent approach which could be used or should be used by all managers. So this way we will have consistency when you're evaluating a portfolio. Good point. We'll take that into consideration.
Okay.
Concerning the UCITS that are governed by the Luxembourg law and even the European now, you have the leverage issue, which is an issue of derivatives and not borrowing, and it allows the manager to go up to 100% on leverage on the equity side, and on the fixed income is more like the value at risk. Now, that means that the manager is allowed to go to 100%. It doesn't mean that in the funds we can go to 100%, may go to 1%, 5%, and so on. Now, for the approved funds, which are the foreign funds, the UCITS, that cannot be accepted by the authority, because I understand with the chairman also that derivatives can be accepted only for hedging purposes. As far as the exempt foreign funds, if I understood well, it's not an issue.
Correct.
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 Yeah.
I would like to add one other point. I mean, as you know, when you're dealing with the leverage and the UCIT, you've got the two approaches, right? You've got the commitment approach and you've got the VAR approach, and each one of them deals with the derivatives in a different fashion. We have even put, and correct me if I'm wrong, Sally, an article. So we're not saying a total no to derivatives. So if you want to deal with derivatives along the lines of selling puts, for example, or selling calls, the article, if I'm not mistaken, states that you should have sufficient funds, or you should have the underlying instrument to be able to deal with it. So we even opened the door for, correct? We've even opened the door for managers to use, and here we're dealing with public offers as well, to deal with derivatives where you can sell puts as long as you put enough cash on the side in case you get assigned, and in case you want to sell calls, you better make sure that the security is kept on the side just in case you get exercised as well. So dealing with the nature of the derivatives as such, we're keeping those two strategies available to the manager to deal with them in case they decide to do so. Does that answer your question?
Okay. Any other question? Yes, please, in the back.
Yeah, hello. Mazen Nasser, BLC Bank. I'm sorry I came a bit late, so this issue might have been brought up in the beginning, but it's an important question I have to ask. This is concerning going below par NAV when it comes to dividend distribution. I consulted my auditors, Deloitte, I'm sure everyone deals with them, and they said that it is strictly forbidden to go below and par NAV when it comes to dividend distribution in the fund. And I wanted to ask, is this a CMA regulation behind this decision, or do we have any way around this? Is there a time frame whereby it is allowed for us to distribute dividends, especially at the beginning of the fund? Because there's another issue that the auditors don't allow you to distribute dividends from unrealized gain or loss. This is something that's excluded from dividend distribution. And especially when you want to start in new funds, given current market prices, it's becoming very competitive to maintain high dividend distribution. So is there a CMA regulation that forbids us going below par NAV when it comes to dividend distribution?
From memory, the regulation says that you can, well, you may have an accumulating fund which does not distribute anything, or you may have a distributing type, an income type fund which does distribute, and you are able to distribute income received in the form of rental if it's property, interest, or dividends from shares, or realized capital gains. Now, the ability to distribute, this is a matter of tax law in most countries, okay? For instance, in the UK, from where I come, we are required by tax law to distribute 85% of income received, and we are not allowed to distribute capital, whether realized or unrealized, doesn't matter, okay? Here in Lebanon, as I understand it, a realized profit would be income, in the general sense, and therefore that could be distributed if the fund is of a distribution type. Okay, so you can only distribute income and realized capital gains. That's it. But you don't have to. You may choose to have an accumulation fund which does not distribute income and does not distribute gains either. Is that what you wanted to know?
Yeah, very clear. Another thing, do we have this law in Lebanon, the 85% mandatory distribution of income realized?
No, I mean I'm just giving you an example. That for instance, in America, if you look at the law for funds, you have to distribute and you must distribute capital gains. There is no realized capital gains. There is no choice, unless it's held inside a pension fund or something where you roll it up. But all I'm illustrating is that it's usually a matter of tax law as to what a fund must or must not do, and not just a matter of what it says in the fund regulations. Yep.
Thank you.
Okay. Any other question? None? Okay, allow me to thank you for, still? Yes, Mr. Shikhani. Just in a minute to get you the microphone.
Yes, there is a point on the performance fee, and it states like this: the payment of a performance-related fee by a scheme to the CIS manager or any other party is not permitted, except if a proportionally lower fee is charged on underachievement of performance against that same benchmark. Yep. Can you explain that, please?
This is what in the fund management jargon they call symmetry. What it means is, if you get an additional fee if you outperform, if you underperform, you must get an equally reduced fee, lower fee.
You mean the management fee?
Management fee, annual management charge. That's the way some people make it work. Yeah. I mean, typically what you do is you have your, I mean, if you want to have a look at an example, have a look at, in America, what they call a fulcrum fee. Okay, it's a similar concept. Basically, it just means that if you're going to get extra for outperforming, fine. But if you underperform, then there should be some level of penalty. The way it typically works is that you limit the upside and the downside of the fee movement, okay? So you say we'll never get less than, say, 60% of the annual stated fee, but we can get more than that if certain things. Certain eventualities arise, such as outperformance of the index by more than 2%, or whatever your particular fund rules are designed to say.
Is it a common rule in all jurisdictions?
It is a sensible rule for protection of the investing public. It only applies to the approved funds for public offer. Doesn't apply to any other fund for professional offer. It's only for the public. Yes, it's a rule in America. No, it's not a rule in Britain. I can't tell you exactly for many other countries because you have to have really detailed knowledge. There are many countries that don't allow any performance fee at all for retail schemes. It's just the flat annual management fee and no performance.
No upside, no downside.
So that's the other option. It's just the straight annual management. Because after all, the annual management charge is expressed as a percentage of the value you manage, right? So if the value of that goes up, your fee goes up. So you have an incentive to perform anyway. So some countries would argue no performance fee for retail funds, but it's fine in the institutional or the professional environment, no problem.
But it's common sense, but however, on the administrative side, it's going to be very difficult to calculate this for investors. I mean, how would you do it? I mean, I understand it, but how would you do it practically on calculating the NAV and affecting the profitability for an open-ended vehicle where you have people that went out and then they came in? I mean,
it means you have to calculate, you have to factor it in into the daily net asset value calculation. Basically. You have to find a way of doing that.
But it's very complicated.
I agree with you, it's not easy to do.
Right.
And this is why performance fees typically are rare on open-ended funds, because investors come in, one investor, I come in day 1, I leave day 36, Khalil comes in day 6, he leaves in year 5, everybody gets something different. That is why the fairest way is to factor it into net asset value calculation
Fairness,
every day.
yes. Rationale, yes. But however, on the practical side, it's headache.
I agree. I mean, I do agree that. Well, we can take performance fees out if you want, and no performance fee, no problem.
No, even fairness is not here because assuming you take the minimum management fees that you have set, waiting for the performance fee to come, people who would get out before you know that you can take the maximum management fee will be privileged compared to people who stayed in the fund while you were...
Exactly.
That's why it should be reflected.
That's why
in the
you have
NAV.
to put it into the net asset value calculation every day. So every day, a person pays the proportion of the charge they should pay. But I agree with you, mathematically and administratively, not easy to do. Yes.
Mr. Salem, you have a question?
No, it was the same comments as Jean just said. It's very difficult and it's complicating the process. And I don't know if we have maybe to look again at this point that have been stated in the.
Let's have the
How would you suggest? I mean, not in closing, obviously, there's more questions. But this is something definitely, if we can brainstorm together and if you can provide us with your thoughts and feedback and send us your ideas. I mean, we don't want to come out and scratch performance fee because a lot of fund managers could be doing well and are taking advantage of it, and rightfully so, in my opinion. But if you have any ideas and thoughts as to how to process this through, by all means, give us your thoughts.
Share it. Okay.
Okay. Yes, please.
Final point. Sorry. You give just 1 month time after we have the okay from the CMA to commercialize the fund or to place the fund. Why is 1 month only? 20 days, in fact. It's 20 working days, so it's 1 month.
No. This is for the initial offering period,
Yes.
the 20 days. So here we're giving you an opportunity to say, okay, you're commencing now the offering of the product, and you've got to tell us how much you're expecting as a minimum to raise. And as we've discussed, the minimum is $10 million. And during that period, as I stated, or as the regulation states, that the fund manager cannot invest those funds and they have to be in deposit. So if you're saying 20 days is not sufficient to market a fund, because the flip side of the coin is that if I'm a subscriber and I give you the money on day 2, and if I end up thinking that my funds are going to be zipped into that particular scheme that you are marketing for a period of 2 months, why would I or should I subscribe now? So at the end of the day, if you feel 20 days is not a flexible or enough sufficient time, let us know what you feel is best.
It's flexible.
I mean, we have to make a decision on it, but give us your thoughts.
Okay.
Excuse me, why 10 million? I mean, could it be less?
It could be less and could be higher. I mean, the chairman input on this matter, and this is literally, is that he doesn't want to have products coming out in the market for $1 million or $2 million bucks. This is not a structured product. This is a mutual fund. Yeah.
We have the lady back there, yes. We can't hear you. Can you raise your voice, please? We can't hear you.
Okay. Mediclear, as you know, is the custodian in Lebanon, central custodian. At the same time, we are giving the service of being the administrator of funds in Lebanon. And I think we are the only one in Lebanon who give the service. So in the new regulation, we mentioned the duties of the manager, the duties of the custodian, but what about the administrator? It's not mentioned. I think I didn't see anything about this. So he is a different role than the custodian. Oh, he has a definite role in this part. Please, we can note that.
This may be down to terminology. Sorry, in sort of global terms, let me just check what you mean by administration. Do you mean things like the shareholder register,
No.
sending out reports?
It's the calculating of the net asset value, keeping the accounting,
Right.
accounting books of the fund, calculating the net asset
Keeping-
value, and
okay.
the accounting, financial
It's not-
statement,
yeah.
whatever. It's
Okay.
related to
I
accounting
understand.
of the fund.
I understand. Basically, all those activities are made the responsibility legally of the management company, okay, the CIS manager. The CIS manager may delegate any of those tasks to an administrator like yours, no problem. But there is, it's not required that they do so, it's a choice. The CIS manager remains responsible. I'm sure your organization would never make a mistake, but if it did, the manager is nonetheless responsible and it would have to go after the administrator to recover any damage that it had suffered. So the administration in terms of valuation, accounting, keeping track of the portfolio, everything else is the responsibility of the CIS manager, but it is able to delegate that to a specialist administration service if it wishes. Yep.
Before they said they should delegate this, they should, the manager cannot calculate the net asset value by himself. They should delegate this job for interest. He can do it. No,
They are
Mr.
responsible. I mean, I'm sorry, in virtually every country, the manager is responsible for the valuation calculation because it is the evidence of what they do with their investors' money that is what you're looking at. In a very few countries, it's the responsibility of the entity that Europeans call the depository, here the CIS custodian, but it's always the responsibility of one or other of those parties legally, never the administrator. Okay?
Okay. Yes, Mr. Go ahead, please.
My name is Bouldokian from Credit Libanais. I have two candid questions. Since it's collective investment, a collective scheme, how many persons or institutions can contain? Question number one.
Sorry, could you say again? The number of persons?
Yes, in the scheme.
It's open. I mean, there's no
Any.
limit as
Open.
to number of individuals.
Any number,
There's no limit.
1,500, 300?
Any number.
Any number.
Okay, fine. In taking these investors, for each person that is going to invest, are you going to apply the various new regulations since 20 years, such as OFAC, FinCEN, Patriot Act, or some other regulation that might come in the future. That is identifying the investor. What are the rules?
Identifying the investment, you mean the manager? What the rules of engagement for the manager to follow?
No, I want
investor.
to participate in a scheme.
Okay. In the rules it says...
You have to identify me.
Yes.
Are you going to
Passport
apply
number.
all the regulations that have come since 20 years from Patriot Act to now?
In the regulation, and forgive me, I'm speaking from memory, you would have to know for each investor their name, their passport number, their address, and I think their bank details for payment of income, but that's it. It's really a matter of knowing who your investor is.
You have to make a KYC on each individual.
Of course, it's the responsibility.
I said it's a candid question, but
No, fine. It's the responsibility of the placement agent before he sells a product to a client, because we started by saying in the previous regulations that it is the onus of responsibility is on behalf of the institution that has opened an account for the client. So the client would have had to fill a KYC, the suitability assessment would have had to be made. Now what's involved in the KYC as fields is already covered in the security offering in previous annexes.
Thank you.
And that would be our last question? Yes.
A last question regarding some schemes, let's say the index scheme, whereby you set that not less than 90% of its net asset value has to be invested in constituent of securities of a specified index. Why 90%? Why not 80% or 75%? Why it has been set and it seems rigid?
Typically, internationally, the rule is variable a bit on the 85% to 90% front. That's the usual range. The rest of it is an allowance for you to have some liquidity for sale and redemption of units, payment of expenses, etc. Typically, you'd expect to see a fund actually 95% invested on a voluntary basis, not a mandatory basis by regulation, but because if you're investing in a rising market, you want all the money possible to be invested in order to share in that rise, because the more cash you hold, the lower your performance will look compared to the index. So, I mean, 85% is a fairly common rule. It's not the only rule. If you have a particular feeling that it should be higher or lower, by all means tell us, but it's a typical rule, is all I can say.
Just a matter of flexibility, to have some room. Let's say, why don't we put, let's say, a bracket between...
But a room to do what? Sorry.
To do what?
Sorry to interject and to cut you off. The objective when you're investing in a fund, there's the mandate of the manager is very clear in the prospectus or the bylaws. So if I'm entrusting my funds to a manager to manage it on my behalf, and it's quite clearly stated whether if I'm approaching a fund of fund or whether I'm approaching a certain type of an index per se, it means I've identified in my headspace as an investor that I expect the fund manager to invest that money for me. The big debate is how much and what would be an appropriate portion to allow from a flexibility point of view to a manager to keep even in cash. So if you ask me my humble opinion in this business, if I'm an investor and I'm putting $100,000 with a fund manager, I don't want him to keep 40% of that money in cash. I'm paying him to use his expertise to literally go 100%, and we're giving this leeway of 10% borrowing to be able to satisfy redemption purposes. So whether it's 90 or 95 or 85, I mean, this threshold we can look at, but please provide us with your thoughts.
Yeah.
Okay. We have to conclude this. That will be the last question we'll have today. Yes, because...
You mentioned earlier that foreign funds are subject to their home jurisdiction laws. What if there is a silence in the law, in the foreign law, regarding the limitations? Do the Lebanese limitations still apply for foreign funds? the recognized funds?
I mean, for recognized funds, they're for public offer. My guess is that 95% of them would come from Luxembourg or Dublin here. Maybe a few from Switzerland, maybe, I don't know. And therefore, they will be subject to the UCITS regulation if they meet that requirement, and therefore they're subject to the same rules pretty much in every country about everything. Because the UCITS rules basically say, to be sold across border, this fund must meet X requirements, and it has no choice. It has to meet those requirements. So it's fairly likely that they're going to be very, very similar everywhere you look. And the Lebanese domestic regulations are designed to be as similar as is feasible to the European market. Yeah. I'm trying to think of an eventuality where it would matter that it was different. If it was higher borrowing, it wouldn't be for public offer. If it was higher leverage, it wouldn't be for public offer. If it took more concentrated risk, it wouldn't be for public offer. So the regulator would look at its regulated status, and then it would look, if it needed to check, at the regulation of the home country to see if there was a variation there. But it's difficult to answer except on a case-by-case basis, really, that question. Yes, you have.
I agree.
Okay. We will expect your feedback within 2 weeks' time, even though it has been passed. But we will extend that for 2 more weeks before finalizing the draft to the board to decide on this regulation. So please, let's be compliant with that time frame. And I'll thank you for your participation today, and many thanks to Sally, Khalil for their contribution. Thank you.